How are they? Good morning. Welcome to the Analyzing Actions of My Subscribers section, where we analyze Mondays, Wednesdays and Fridays in action that you send me. You can leave your comments directly with the stock or sector you would like me to analyze. Or you can go to my website luisinversionYfinances.com. There they go to the link where they can send me a WhatsApp directly, or they can send me an email. All the information can be found on the website, but that is on Monday and Wednesday. On Fridays we analyze a stock of my choice, and today I want to analyze a very important stock called Target, which has fallen a lot in the stock market. So quickly we're going to come over here and check out Target. We have it as trading under the Target Corporation at $110 per share. In just this year 2023 it has gone down 27%. In 1 year it has gone down 30%, and in 5 years attention, it has generated 25% profit. It has fallen from highs of approximately $256 per share to $110, making a loss of more than 60. We are going to analyze what has happened to this sector, because there are many companies in the sector that are falling significantly. If we come here quickly to look at Target's enterprise valuation, let's update this quickly, confirm that everything is fine. We have a PER of 15. The sector average is 20. That is positive, and the last 5 years Target has traded at a PER of 18 and 19. It is currently at 15. Today it has risen simply 1%. And we are that the analysts, specifically 36 professional analysts, expect Target to go up to $150 per share, and the pessimists expect it to be $120, and now it is at $110. That is, below the most pessimistic estimates that the professional analysts have. The optimists expect it to hit $184 per share. So you have to take this into account when investing now. Target, for people who are not familiar with this, has approximately 440,000 employees. Founded in 1902 in the United States, Target Corporation operates as a general merchandise retailer in the United States. The company offers clothing for women, men, children, babies, footwear, jewelry, shoes, personal care, baby items, basically everything you can think of, Target has in their stores. So be careful there. Let's look at some very important news about Target and why it is dropping so much. Specifically, Target has started to fall since approximately April 2020. So let's see some important news in this regard. Analysts tell us the financials say buy, but there is too much drama. For now, let's analyze what it tells us here. The much-needed normalization of Target may be over, looking ahead after a soft second quarter. Let's also look at Target's quarterly results to review how it has done month by month. DGT is the acronym. Remember that this is live so that you also learn how this is done, how an analysis of a stock is done. In this case we have Target's quarterly reports. The last ones in August were mixed, with an EPS above the forecast, but weaker than expected revenue, just like, of course, a quarter before. That is, 2023. I was wanting to see these too. So the revenue issue is a problem for Target. Let's review some important news here. It has a beta of 1.1. It is not a defensive action, but it is not a speculative action, it is a normal action. We have a beta of 15 and we have a dividend of 4%. The dividend is quite high, and that is something that makes this company attractive. Let's compare it with Costco, Walmart and Lowe's as well to see a broader perspective. We have Costco continues to do it its way. On Tuesday, Costco Corporation beat expectations for quarterly earnings. Here it is. Despite persistent weakness in sales, this Target. The goal of closing 9 stores indicates a larger problem in these major cities. The big box retailer decided to close 9 stores, and with that decision comes a litany of criticism and fear. Attention with that. Target plans to close 9 stores and increase their security. There have also been looting in the United States in some Target stores. Target to close stores in San Francisco and other cities, alleging theft. There is, as many large retailers have complained about retail crime, it affects their stores. The retailer said on Tuesday that stores in city markets have to close. Closes 9 stores. Here it is for theft and crimes from retailers to specialized retail companies. Let's check. 3 days ago, 4 days ago, Target will hire 100,000 employees at Christmas time. Attention Target shares. They can win. From here, the analyst says, margins are recovering. Let's review this news. We're also going to come here. I want to review the most important news from Target. Will you close stores in San Francisco? We are going to continue reading here in the Wall Street Journal, which tells us that we must pay for the premium plan. Let's come here too. Target stock may continue to rise. Let's see if he throws us out too. Not here, here it is perfect. Last year, before Target stores were besieged by violence, thieves and consumers upset by its traditional Pride Month marketing, investors had a big concern. Margins are also falling. Be careful there, mainly. Apparently, these are the thefts that are occurring from retail companies such as Target's, and it says that they have fallen almost 20% so far in 2023. They have fallen even further. The last phase of the decline, which began in the spring of 2022, was precisely when the company had to reduce its outlook twice in the span of just 3 weeks. The biggest problem was the fact that Target and other retail peers were well stocked with merchandise in previous years, wanting to avoid the out-of-stock issues that limited sales in the early days of the pandemic. That worked well until early 2022, at which point the stimulus checks were released and almost all pandemic restrictions were lifted. The result was that Americans were no longer receiving extra money to finance purchases of things they stocked up on during the pandemic, such as clothing, household items, etc., which is especially Target's focus, and they were willing to allocate the leftover funds to things like eating out and taking vacations that had been prohibited during the peak of the pandemic, he says. So, Target was left with a huge backlog of inventory to resolve this, of course, cutting into margins. Plus the looting issue has been quite damaging given that they get more of their business from selling staples. This also recovered a bit. Investors also didn't necessarily overreact in 2022. The company's earnings before interest and taxes margins fell 3.5%. However, margins have slowly recovered, and it tells us that inventories are also in much better shape now and we are slowly improving, so there have been quite a few cumulative problems for Target. Basically, this is what I just mentioned to you, and we are going to review how other companies in the sector have fared. Otherwise, we are going to review the size of the company or anything. But I want to check the graphs. The charts are very good for both Costco, Walmart and Lowe's. So Target's margins are quite low, in addition to the fact that it has been affected by constant thefts and also the excess inventory it had, and this caused margins to fall significantly. We have that the company has solid finances despite everything. We are going to review that here. We are going to put Target in Finviz to be able to review the company's finances. We have that Target has interesting finances. You can pay your debt without any problem. Let's review that now. A profit margin of 3% is not much. It will be necessary to review the profit margin of other companies. Let's do it, of course. I want to see the profit margin, for example from Costco, so I can review. Here is Costco, which we have the margin of 2.6. That's okay. Perfect. Walmart. Let's look at Walmart's margin of 2.23. Perfect. The margin is correct. An interesting pair. I really like the useless price of 0.47, the book price of 4.24, and the fairly high dividend at Target. So basically that's why bad prospects are falling. Mixed results in the quarterly reports. Plus the debt it has is not that bad. Looting is also a serious problem. What happened to the company that not long ago cost $260 per share? He tells us I will talk about this briefly because I would like to focus more on the company itself. The company has been affected by deteriorating margins. Exactly what I was telling you, which played a very important role in the depreciation of the share price. The theft, also known as MEMA, was also attributed to the company's lackluster profitability of late. This is where things get quite political. In the comment section, I'm not interested in politics, he says, and I have no right to talk about what's happening in the United States. However, it is not a good idea for companies to get involved in these matters. Just look at Disney. These issues have been addressed before. I won't go into detail shortly. Let's check. So, due to negative sentiment, stock prices have fallen. Finances are also not very stable. Mixed quarterly results. Here we have an in-depth analysis of the company, the evaluation. There's no need to go overboard with revenue growth, as I don't see any potential catalysts that will propel it to new levels. You have to be attentive. Analysts expect it to rise. I'd be very cautious for now, he tells us, as stocks tend to hit new lows once they hit their 52-week lows. Very interesting. All these articles can be found on the Seeking Alpha page, which is a premium tool that I use to analyze actions in the posted comment, and also in the description of this video there is a link and it says Seeking Alpha and they have $50 as a gift, plus 7 days of trial to test this tool. Take advantage of that promotion. I don't know how long it will last, just for clicking. They have $50 as a gift and also a 7-day trial. So take advantage of it. Take advantage of it because they change week to week, month to month, those promotions. For now it is that, maybe it is less, they are reducing this every time. So if you, take advantage because, as you can see, it is a very complete tool. Now I want to check out targets the chart actually to see how it is doing. Let's review in 5 years. Minimum term would already be directly less than $100 per share if it fell to less than $100 per share. It is a very interesting purchase that could be made with Target. If we put ourselves in 10-year perspective, we have fallen quite a bit, so as you can see, if we fall below 100 it would be a very interesting price. A low we could expect at Target would be below 70, so there's not much further room for us to fall unless the company is already in serious trouble, which it is, of course. That's why it has fallen about 60% from its high of 270. But robots have to end the issue of margins sooner or later. They have to improve. A priori that is what worries me the most. And the issue of profits too. So be careful. The competition that Target has, as you realize, is quite high, so we should review that. Please also remember that we are going to be in the workshop on October 18, 19 and 20 at 6 p.m. Mexico time, 7 p.m. Peru time on 3 days in a row. About dividends, I'm going to teach you how you can live off dividends in the stock market whether or not you already know how to invest in the stock market. This workshop is going to be exclusively dividends. I am going to tell you 10 dividend stocks, 10 dividend ETFs that you should have in your portfolio, at least a couple of them key and 100% recommended. Please note that we will be live for approximately 2 to 3 hours a day. What you have to do is go to the link that is in the description and also in the posted comment. Leave your name, email and phone number on my website luisinversionyfinances.com. Here's a little bit of my story that you'll learn in the live workshops, plus one of the two. Or you can join the WhatsApp group so that I can send you the entire link, all the links you need, especially download links that I will share day by day. For example, this Sunday I am going to share with you only with the people who are already in the group. Afterwards they can ask me for anything. 30 pages about Warren Buffett and what is his investment model. What do you mean by actively making money in the stock market? Everything Warren Buffett has to teach us in 30 pages. I'm going to pass that on to you, of course, by email. So go to the pinned comment or description so you don't miss that now. Target well. Let's try to get the intrinsic value for Target, especially in its EPS, because most likely it is not in your free cash flow. So we made an intrinsic value to Disney. We go to Target with the current price, which is at $111 per share perfect, an EPS that is at 7.27. Perfect 2. 7.27. Sales growth for years. We leave it for a second and the PER is at 15 of per 15.28. So let's review year-over-year sales growth. That's why we come to Yahoo Finance Analysis. We have here, and for that I also want to come here for Target, profitability, growth. Here it is. Sales growth and PS. Perfect long-term capitalization. Very significant year-on-year EBITDA growth in income. Approximately 8% annualized. Very interesting. We are going to come here and we have that the growth estimate is very low with respect to income. The income is low. No. I really like this. Year-over-year sales growth would be 1%. And those 0.5%. Target's year-over-year sales growth isn't much, according to analysts. And also here there is something look like it is at 0.14. Currently the growth in the last 5 years is 8% in terms of sales income, which is related. Let's put it 1%. Let's put it 1% because it is currently at that, and here it is equal to 1%. Yes, 1%, 1%, which is very low, it is true. But well, the intrinsic value is at 112. The current price is at 111. So you have a fairly important margin of safety. If we put 2 here, of course this will vary, but not much either. So you have a small margin of safety taking into account the intrinsic value of the IPS and the pi ratio. Let's get over here quickly to check on your finances with Target. Let's come to the balance sheet. First I want to look at the issue of your income, which is growing year after year. Perfect. I like that. I also want to see the total assets 42, 51, 50. Perfect. The debt is at 18. You can pay for with less than half of the total assets. That pleases me very much. And the discounted cash flow is negative. I don't like that, and that's why we can't give it a cash flow discount. We could do it with 2022 or looking at 2023, but it doesn't seem like a good idea to me. So we have a small margin of safety. According to its EPS and its ratio, and the free cash flow issue is currently negative and is growing year over year from 4 to 7. Here it grew almost 100%. Then it fell 35%. Now it has fallen almost 7. So I don't think it's a good idea to take out the intrinsic value taking into account the cash flow. Personally, I really like Target. It is an interesting company. I am currently investing in Walmart, but not at these prices. I grabbed it a little lower because it was a defensive action. I like it a lot. As you can see, it has grown quite a bit. It is at historical target highs. On the contrary, it seems that it is totally contrary. The chart, if it drops below 100, is a very interesting buy, and you could get in with some cash here. Unfortunately, I have Walmart at the moment. So I say unfortunately because I like it. I also like Target a lot. If you don't have exhibitions, it could be an interesting option. It has an interesting safety margin. Less than $100 could be an interesting purchase. And then, as I told you, if we put a 10-year perspective directly below $60 or 70, less than $70 would already be a very interesting option. And from there you would have to be worrying because the stock market would have fallen too much and would be almost at a 10-year low, which is quite worrying. Yes, so I want to know now, or what do you think about Target? Would you like to have this option in your portfolio? Are you planning to have it? You already have it? At what price did you enter? Leave me all your comments at Target. Would you rather invest in Walmart? Would you rather invest in Costco? I want to know your opinion. Leave it to me in the comments. Remember to also register for the workshop on October 18, 19 and 20 about dividends in the link in the video description and also in the posted comments so you can register. And also remember, if you want to use the premium tool that I just showed you from Seeking Alpha with a $50 gift and a 7-day guarantee, 7-day free trial, you can also find the link in the pinned comment and in the description of the video. Here I leave you the website so you can register and save your place for the 3 days of the workshop. About dividends. Here I leave you a playlist that may interest you. And here subscribe to this channel that we are live from Monday to Saturday at the stock market opening 9:30, New York time. Reviewing stocks and opportunities in the stock market that have a great start to the weekend. Bye bye. Bye bye. Bye.